Hello, everyone. This is Arthur Robinson Jr. I am the creator of PowerfulInterviews.com. I want to welcome you to this video. In this video, you're going to experience life-changing information that you won't find anywhere else. I'm doing an incredible interview with a great friend of mine. His name is Michael Maloney. And Michael Maloney, he is a gold and silver expert. And Michael Maloney is Rich Dad's advisor with Robert Kiyosaki. And in this interview, he's going to explain how you invest in gold and silver. He's going to explain about fiat currencies and much, much more. So right about now, go get your pen and your pad, sit back and relax, and write down some notes. In this interview that I'm going to reveal to you in regards to the gold and silver markets with my great friend Michael Maloney is going to change your life. So check it out. Good evening, everyone. This is Arthur Robinson Jr., and tonight I have another special treat just for you. Tonight I'm going to be interviewing a great friend of mine. His name is Michael Maloney, and Michael Maloney is a precious metals expert. And for those that don't know Michael Maloney, let me get you familiar with him. Since 2005, Michael Maloney has been the precious metals investment advisor to Robert Kiyosaki, author of the most successful financial book in history, Rich Dad, Poor Dad. He has also the privilege of interacting with influential government and economic leaders such as Congressman and presidential candidate Ron Paul. Michael is the author of the best-selling book, Guide to Investing in Gold and Silver, part of Robert Kiyosaki's Rich Dad Advisors series of books. Since 2002, Michael has specialized in education on monetary history, economics, and financial literacy. Mike is widely regarded as an expert on economic cycles and has demonstrated to audiences throughout the United States that economic cycles are real and that investing correctly for each phase of the economic cycle is a road to true wealth, and that is an awesome resume. Without further ado, I'd like to welcome Michael Maloney to the call.
Well, thanks. It's good to be here.
Well, thank you, Michael. I'd like to thank you once again for taking time out of your busy schedule to educate my listeners about the gold and silver markets. I gladly appreciate it. So what I would like to know, and can you educate the listeners about who you are, and can you remind them of your background, and how did you come to understand the gold and silver markets?
Well, actually, I've done a number of businesses in my life, and throughout the 90s, I was in the electronics industry for high-end audio and home theater. And in the early 90s, I used to produce high-end audio equipment, and then later on started producing a convention for high-end audio that competed with the Consumer Electronics Show in Las Vegas. I came to a point where my family's estate needed to be handled by somebody. My mother was not able to handle things, and so my sister and I interviewed a bunch of financial planners, about a dozen. We picked the one that we thought was the best one. He came with glowing recommendations, more testimonials and recommendations than anybody else, and it looked like his past results were fairly good. And so in 1999, we gave him control of the family's assets, and over the next couple of years, he lost about 50% of the family's assets. And I asked him, do you study the stock markets? And he said, no, I'm just doing what I was taught when I got my financial planner's license. There's a method to this and a formula, and you just do it this way. I said, well, do you study the economy? No, just doing what I was taught when I got my financial planner's license. So I fired him, and I moved everything to cash. This was back in late 2001. And I just dove head over heels into studying the stock markets. And the economy controls the stock markets, so I started studying the economy, and that led me into the global economy. When you read about the global economy, the people that do all of the writing about global imbalances, trade deficits, budget deficits, all of the dislocations that are going on, tend to be the gold community. They're the most concerned with all of these things. And so I started reading a lot of people that were from the gold community. And they also tend to be people that love monetary history. And when I discovered monetary history and that all this stuff that is happening has happened many, many, many times in the past, and it's just history repeating, but with a little twist, that's when I really fell in love and just went off the deep end studying monetary history. And I've studied it for many years. When Robert Kiyosaki asked me to write a book back in 2005, the book that I started writing was basically a very thorough monetary history where I merged its effects on political systems, how the rise of Napoleon and Hitler came directly out of hyperinflations, and Mao came sort of indirectly out of a hyperinflation. Then Robert called me after about a year or a year and a half of writing this book, and he goes, "How's the book going?" I say, "Fine." He says, "What's it about?" And I tell him. He goes, "Well, that sounds good, but right now I need the one on gold and silver investing, and I need it yesterday." And so I switched over to that book. But basically, no matter how much I had learned studying this for the prior 4 years, when you're writing a book on it, it has to be right, and you really do learn an awful lot. Robert wrote a book once called Teach to Learn. And when you're going to teach something, you had better know your subject. You'd better know it inside and out. And so it was a tremendous journey. But even very early on, after this financial planner had lost about 50% of the family's assets, it only took until mid-2002 for me to determine that a brand new bull market had developed in precious metals, and that the rest of the markets, the stock markets and real estate, and we can come back to this later because I can prove it if you want, real estate and stocks have been crashing for 10 years. There was this entire real estate bubble measured in gold or silver instead of U.S. dollars. Real estate has been crashing for 10 years. The same thing with the stock market. The stock market was at 11,700 in 2001, and it was at 14,000 in 2007. But during that time, the value measured in gold, its peak had actually been in 1999, when if you had sold one share of the Dow and purchased gold with the proceeds, you would have been able to get 45 ounces of gold. Today it's only worth 9. It's a little less. It's like 8 3/4 or something like that. So the Dow has crashed 80%, and it had already crashed 80% before this big stock market crash. That's the stock market crash that we had in 2007, and this bounce. That wasn't the real crash. The crash has been going on since 1999, and I proved this beyond a shadow of a doubt in my book. There's an entire chapter devoted to price versus value. And in there, I took the Dow as a proxy for the stock market, since it was the best performing index. I wanted to give the stocks an even break and then some. So if there's any errors, it's on the side of stocks, not on the side of gold. And because the S&P hasn't performed nearly as well as the Dow. So I took the Dow and I divided it by not only gold, but by the commodities spot price index, oil, agricultural spot price index. So I'm dividing it by the price of food, basically. Industrial metals, copper, the 30-year Treasury note. I divide it by, with the exception of the 30-year Treasury note, every real thing that I could find. And measured against real stuff, stocks have been falling in value.